Tesla's come a long way since it first went public in 2010 at $17 per share. A lot of speculation has been made about the price and future of Tesla stock, and financial expert Ron Barron has just exposed Tesla stock, saying that it will go 30 times despite the current decline. Why does Ron Barron believe this, and what's the reasoning behind this stance? We'll be delving into the answers of these questions, as well as discovering if there's statistics to back up Ron Barron's statement in today's video, so be sure to keep watching. Ron Barron, the chairman and founder of Barron Funds, made a statement on Tesla recently. In an interview, Barron speculates on how far Tesla stock will go. Over the years, he's been an avid supporter of Tesla and declares he's made a lot of money from the brand stocks. Barron projected that Tesla would grow into a major player in the automotive industry. With a 1% interest in the Silicon Valley automobile firm, his firm, Barron Capital Management, was one of Elon Musk's major investors in 2016. Barron explained, saying, "We've invested $380 million between 2014 and 2016, or 1.5% of our assets at the time. We've made $4 billion in profit thus far, and I believe we'll make 3 or 4 times that in the next 10 years. Barron reveals why he invested in Elon Musk's electric car firm in the first place. "I thought the possibility with Tesla was to transform the cars we build in the United States from gasoline to electric." Now, Barron is once again saying that Tesla will go 30 times higher than it currently is. Tesla has undoubtedly achieved a lot of success recently. The company put 4 battery-powered models into the global market in January 2021, generating sales of more than $31 billion, increasing the market-based valuation from roughly $1.7 billion in 2010 to more than $800 billion. Tesla has consistently challenged its detractors throughout its existence. Many people still doubt the company, and Elon Musk has had to repeatedly prove his worth in order to take over the world's most valuable vehicle manufacturer. But how did it all begin? Let's find out. Since its initial public offering in 2010, the history of Tesla stocks has been a gratifying ride for $17 per share. Tesla made its NASDAQ debut on June 2010 at the price of $17 a share, issuing approximately 13 million shares and raising a total of $226 million. The company was valued at $1.7 billion after the initial public offering, which was priced at $17. For context, Tesla is now the world's second most valuable car firm, after only the Toyota Motor Corporation. After years of struggling, for the first time in the company's history, Tesla made a profit in a quarter of 2009, making sales of $562 million, up 83% from the previous quarter. Eventually, for a more autonomous business model, we believe Tesla began acquisitions which included solar power companies. This was very good for Tesla stock. In one particular case, the stock price climbed as high as 15%. Now this is where things start to get interesting. Tesla shares rose by more than 13% when the news was released that SolarCity, a solar panel and solar roof tile manufacturer and a prominent participant in the residential, commercial, and industrial sectors, was acquired by Tesla in June 2016. It was said to be part of Tesla's broader goal to hasten the international transition to solar energy. With the purchase, Tesla hoped to establish itself as the world's first vertically integrated sustainable energy corporation. By 2017, Tesla had changed its name from Tesla Motors to Tesla Incorporated to symbolize its increasing product breadth. In several publications and statements, Musk stated that he wants the company to one day become a power solution in a variety of areas. By this time, Ron Barron and his firm had already gotten on board and expressed faith in the brand. In 2016, Barron predicted that Tesla Incorporated would become one of the most valuable companies in the world. His firm, Barron Capital Management, was one of the electric automaker's top investors at the time, with a 1% stake in the company. Barron Capital Management is one of Tesla's largest long-term stockholders. According to Teslarati, the investment firm owns around 6 million Tesla shares. Fortunately for Barron, the price of those shares is only $42.88. The investment yielded a $4 billion profit, but Barron believes it was only the beginning, with the potential to climb 30 times higher in the coming years. In a recent interview, Barron said that his firm only invests in organizations that are investing in themselves. This was and certainly is the case for Tesla. Other than Solar City, the company has quite the list of acquisitions that has enabled it to run more efficiently. While less publicized, we believe they contributed greatly to Tesla's current success. In 2015, Tesla purchased one of its stamping suppliers, Riviera Tool and Die, with 100 people in Grand Rapids, Michigan. In 2017, Tesla bought Perbix Machine Company, a company that designs automated manufacturing equipment. Perbix has been a Tesla supplier for nearly 3 years. Compass Automation of Elgin, Illinois, a factory automation firm with experience in automated assembly and inspection systems, was also acquired by Tesla in December of 2017. By the end of 2018, the company was entirely working for Tesla. While history might not be a sure foundation for basing predictions, we believe it plays an important role. Since its initial public offering, Tesla stock has gone from $17 to $838, over 30 times higher. So, can they replicate these results just as Ron Barron predicts in the coming years? We believe they're capable of replicating their previous success and even more. The basic and underlying principles of the brand haven't changed much, and at its core, Tesla still possesses everything it took to get where it is right now. Some would argue that they're in an even better position now. They still have their eyes on the prize, as evidenced by the opening of the Berlin Gigafactory and increased deliveries in the first quarter. They're still maximizing production. They're also still ahead of the market, as evidenced by the delay of the Cybertruck release to improve upon its features. It's obvious that they still see innovation as an important metric of success. A lot of investors seem to believe so as well, which would explain the Tesla fanbase and their unwavering faith to the brand. Barron made the ultimate show of faith, stating in an interview that he intends to keep his Tesla stock for, quote, at least 10 years, and that he promised Tesla CEO Elon Musk that he, quote, would be the last one out. So why are things currently going terribly for the stock? After its climb back to $838, the stock has experienced a decline once more to $795 per share. After its previous record of over $1,000, this has come as a blow to several investors. The situation is not unique to Tesla though, as these difficulties cut across most growth stocks. As investors analyze the consequences of the Federal Reserve's planned interest rate hikes, growth stocks like Tesla have seen a lot of volatility this year. Higher interest rates are generally seen to be less favorable for assets, with valuations based mostly on long-term cash flow projections. Tesla is no stranger to turbulence. In March 2021, the company's shares hit a low point following repeated unfavorable reports and Ford Motor Company's introduction of the Ford Lightning. Tesla's share price had dropped for the 5th week in a row. The stock dropped 1.5% to $580.88 at the end of the week. It was Elon Musk's worst weekly losing streak since March 2018, as investors shied away from risky companies amid rising fears about inflation and its impact on the US economy. Each time, though, Tesla has managed to power through and come out on top. We believe this will be the case once things are settled again. There's little doubt that as the company continues to expand and develop new products, it will become even more relevant as it surpasses its current level. Tesla is currently working at a faster pace to achieve its objectives, and the business has prioritized factory growth because the production and delivery of electric vehicles are directly linked to profit margins. We see these as telltale signs of the future, as Ron Barron has predicted. The stock going 30 times higher doesn't seem to be far-fetched, especially when you take into consideration Tesla's innovative and agile nature, plus its ability to adapt and thrive even under turbulent conditions. What do you think is the future of Tesla's stock price? How high do you think it could go in the coming years? Comment down below.